everyone, welcome back to Money Control live stream. You're watching Market with Santo and CJ minus CJ. Well, the market has suddenly sold off in the last hour of trading, and now the Nifty is close to testing its support level of 17,000. It's fallen rather sharply, led by selling in auto and metal shares. And a quick look at how the markets are. Infosys is down by close to about 3%. Nestle also among the prominent losers of the day. IndusInd Bank, now that's been a stock in focus. Let's look at the stocks on a watch list this afternoon, beginning with IndusInd Bank. Now the counter saw multiple block deals today, and on the NSE so far close to about 20 million shares have changed hands so far. Now the stock has been going through some kind of a re-rating, but there's been a lot of market skepticism whether this will actually come through. But now with this series of block deals, some in the bull camp are saying that in fact now the concerns over which the market seem to be having so far over IndusInd Bank may be finally fading. According to Sharekhan, which has a positive rating on the stock, the concerns regarding liquidity and also regarding the asset quality, those have now begun to fade. If you look at the business update for the second quarter, the credit growth numbers were also pretty strong. 18% credit growth year on year and close to about 5% quarter on quarter. And according to Sharekhan, this is largely because of improving collection efficiencies and also the fact that its core portfolio, which is MFI and commercial vehicles, they are doing pretty well, and the retail book is also showing good signs of improvement besides the corporate book also. If you recall, around the time of the Yes Bank fiasco, IndusInd Bank too had taken a beating on concerns that there are huge asset quality concerns, but now those concerns finally seem to be abating a bit. The stock today though is under pressure at this point in time, but that's been the case with generally the banking sector in general. All the stocks did well for a while, but now they've also been under pressure as the markets in general is selling off a little bit. The next stock on our watch list today is Voltas. Voltas now it's a leading player in the air conditioning segment. The stock had been holding well above a support level of 900 rupees, but of late the stock has fallen below that. The company's market share took a beating at the end of the March quarter, leading to a derating of the stock, and while it has managed to recoup some of that in the June quarter, clearly there are concerns that the improvement in market share has come at the expense of margins, and that's something that the market has been unhappy about. The stock had been trading in a range of close to about 900 to 1100, but 900 is seen as a key support level by technical analysts tracking the stock, and the stock has now fallen below that. The key thing that the market would be watching in second quarter numbers is whether there is any improvement in margins, and unless that happens, probably you could see the stock continuing to be under pressure for some more time. Next stock on our watch list is Mahanagar Gas. Now overall the outlook on gas companies has been quite negative. Gas prices globally have been going up, and the general concern is that if gas prices goes up, the margins of gas distribution companies will take a beating. That's because they too will have to hike gas prices, which means that they'll at some point in time, because of higher prices, it could affect demand. Now with Mahanagar Gas, the stock has now fallen below what technical analysts see as a psychological level of 800 rupees, but it has a few things going in its favor. One, mainly it caters to the retail segment and not the industrial segment, like say someone like Gujarat Gas. So, and at the same time Mahanagar Gas also has a higher share of the gas which is allotted to it at administered prices. So, which means that it need not take too sharp a hike in prices, because of which it can protect its margins. So, Mahanagar Gas did surprise the market with its first quarter earnings. Both volumes and margins were well above market expectation. In fact, the company reported operating margins of close to about 20%. And that led to a re-rating of the stock. The stock rose to about 900 rupee levels, but since then overall again the outlook on gas companies in general have soured a bit, and because of that you are seeing renewed selling pressure there. But this stock, however, because of its exposure more towards the consumer segment such as CNG and commercial units, could probably weather the bear market better than some of the other companies in the sector. And last stock on our watch list today is Automotive Axles. Now, Cummins Incorporated has made an open offer for 26% in Automotive Axles at 1,504 rupees per share. Now, why did this open offer come through? That's because this company is a joint venture between Meritor and Bharat Forge, but Meritor now has been taken over by Cummins Incorporated, and because of that, under the SEBI rules, Cummins will now have to make an open offer for the 26% additional stake in Automotive Axles. Now, according to Axis Securities, the company's profitability is expected to improve in the coming quarter. That's mainly because it has been undertaking a lot of cost cutting measures, many of which have been working. Besides that, it's also looking at new product launches. So, these are two factors that could lead to the company doing better in the coming months. Although if you look at the compounded revenue and profit growth of the last 3 years, there's not been much to write home about, but over the last couple of quarters, that's the June quarter as well as the March quarter as well as the June quarter, there's been a big jump in top line, and Axis Securities is of the view that this trend probably could continue. And now, what's on the horizon? This is the earnings season, so the market focus will continue to remain on quarterly earnings. We had TCS reporting its second quarter earnings yesterday. The numbers were very much on expected lines, but you saw the stock coming under pressure today. That is mainly because the market is no longer satisfied with companies which just about meet expectations, given that the overall sentiment has now turned a bit bearish at this point in time. So, two companies that will be reporting two major companies that will be reporting its earnings tomorrow, both happen to be from the IT sector. One is HCL Tech and the other one is Wipro. Now, Wipro among all the top tier stocks has been the big underperformer and also has the maximum number of sell ratings from analysts at this point in time. So, will the company be able to come out with a strong performance and force analysts to change their minds on the stock? We'll have to see. Well, and with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and do remember to post your feedback in the comment section below. We'll be back again tomorrow at 9 a.m.